we're certainly seeing a massive opportunity right now. We're going as fast and as big as I can. I think part of the reason we've been successful the last couple of years, and I've had calls with other people who have been in the market the last 2 years, and a lot of people just took on bridge loans and got smacked when the interest rates.
Welcome, everyone, to our Hero Capital Raising Show. I'm your host, Tim Mai. Today, I have an amazing guest on the line with us, Mr. Stan Gendlin. Stan has been investing in real estate now for over 15 years, in the multifamily investing for about 8 years. And his first multifamily investment project was developing raw land and turn it into 33-home subdivision in the city of Greenville. We especially have a bigger group of the Carolinas on the call today, it seems. And yeah, not only does Stan have an extensive transaction real estate experience, but also owns and operates a residential construction business. And in his construction business, he has built hundreds of homes across the upstate of South Carolina. And he currently owns a residential portfolio that includes 150 properties. And with that, let's give Mr. Stan Gendlin a big welcome, y'all. Woohoo! A big Texas welcome. Awesome. All right. Stan, thank you so much for being on here with us today. Let's start out. You can share with everybody a little bit about your journey and specifically what had you got interested in the multifamily space.
Yeah, absolutely. So yeah, like you said, I started multifamily in 2016 after doing hundreds and hundreds of flips, buying lots and lots of rentals. Obviously, the scale of buying so many doors at one time was the big appeal. And since then, I've been in and out of multifamily projects, mobile home parks. And today, my business looks like we have 6 companies total, starting with our main company that buys multifamily, develops land to sell to national and regional builders, a very profitable business model. And we also develop raw land and build rental neighborhoods from scratch. And from that, we created a property management business, which manages all of our own stuff, no third party. From that, we also created a maintenance and renovation company, which has taken off like crazy because I guess there's so much demand for that. And so we started maintaining our own properties, but the demand for maintenance is so high right now because there's so few people that are in the blue collar service industry. So it is a gold mine. To me, it's going to be the opportunity that was in tech 10 years ago. Blue collar service industries on the multiples they're trading at with private equity is just unbelievable, and it's only going to keep going up. So a lot of excitement in that company there. From that, we also started the construction company. We build houses for sale, neighborhoods for rent. What's that, business number 4? Number 5 was the realty, to sell our own product. Obviously, commissions to agents is always one of your business biggest expenses. So we have a realty with multiple agents to sell our own product. And then finally, to not rely on brokers to bring us opportunities and not having enough time ourselves, we created an acquisitions company, which does wholesaling, but also finds us deals in multifamily, land development, and everything under the sun. And right now we have between 40 and 50 employees in all of our companies, and we're based out of Greenville, South Carolina. So that's where we are today.
That is amazing. Yeah, you, other than owning a title company, you pretty much get all of the aspects of real estate covered, right?
Yeah, the only reason we don't own a title company is my partner is a lawyer, and he already owns a law firm, and he does all the closings too. So we got it all covered.
Nice. I love
Yeah.
that. Wow, that's a super impressive. So your journey within the real estate space started when?
2009 in Trenton, New Jersey. When I got there after being in the Marines, Trenton, New Jersey kind of reminded me of being overseas too. When you look at how the police were driving around, and how they were dressed and how they were geared up, it was not a fun place to work. It was very depressing. It was a very depressing city. Nothing good going on there. And so I had a Wolf of Wall Street moment where I went to the Marines, met a buddy there. Years later, I'm promoting at nightclubs in New York City, I wasn't really working at the nightclubs. I just couldn't afford to get in because that's what my college degree got me, a $7.25 an hour salary. So I just wanted to promote at the nightclubs so I can get free drinks and get in. Right. And just one night, one of my buddies from the Marines came and he's, hey, I'm flipping houses, I'm making 25 grand a month. And he's, hey, you want to come help me? And I'm like, wait, that's some late night TV scam, flipping houses, no money out of pocket. I'm like, there's no way. And I went on Saturday to see what he was doing, saw it was legitimate, came back to my job on Monday, quit, went to work for him.
Wow.
And yeah, that's how I got started.
That's amazing. And it's a great timing for sure. And it was also a scary timing too, because that market, we were 2009, we were like at the bottom of the market, right?
That's the best thing that happened to me was nobody would hire me. My college degree was worthless. Nobody would hire me. I remember I applied to be an armored car driver at Brink Security, any job that I could find on Craigslist, or nobody would hire me because I had a communications degree, which is worthless. So that was the best thing that could have happened for me.
Wow. Yeah, no, that's a lot of times it works out that way, right? What looks like a step back turns out to be like a huge launch of something amazing. So I know your journey into multifamily, you started doing land development and building a subdivision. Share with us a little bit about that. What had you saw the opportunity was in the new development versus buying an existing assets?
Yeah, absolutely. And I tell you, it's funny, the biggest lesson I learned on that first deal is I was on a podcast and the deal, we were just going through the process of getting the deal approved with the city. And I was on a podcast and I'm like, all of our neighbors on this development are landlords. Nobody's going to care about us getting so many houses. We're going to make all this money. And then I go to my first community meeting and everyone's heard the podcast saying the neighbors don't care about what I'm doing. They don't care about their neighborhood. And it was packed and everybody was pissed
Oh
off.
man.
So don't talk about what you're doing before it gets approved. A huge lesson. Don't brag about it. No, honestly, the reason I got into development and it's the reason for all of my success today was strategic partnerships. The reason I do development today is because I have a partner who has experience in it. The reason I run a
Mm,
maintenance company is I have a partner who's done maintenance for 15 years. The reason I have a successful property management company is I have an operator in there. So strategic partnerships was what got me in the door. And I've just always been like willing to give up a piece of the pie to scale and grow and learn. So that's been the number one key to my success is strategic partnerships. So that's how I got into my current company, Van Rock. My partner, Brian, knew how to develop multifamily. I had a 10-acre site that I had no clue what to do with. He came up with this awesome plan, and that's how our partnership started. So it's always started from strategic partnerships.
that's good. Yeah. That's to scale. Yeah, that's you almost have to, right? To scale and still have your sanity. Not
Yeah.
try to do everything.
Yeah. And unfortunately,
Yeah.
like the biggest mistake I see people make with partnerships is I'm going to partner with my dad, my brother, my friend. No, you partner with someone that knows how to do what you don't know how to do or wants to do what you don't want to do. That's been really key. Way too many people I see partner with relatives, siblings, friends, and it's never a good fit or rarely a good fit.
Yep. In terms of, I mean, you have a pretty wide experience in a number of different asset classes. And do you have any favor as to what you like, what asset class you like the most, or is it all about your ability to how good of a deal you're able to buy them?
The asset class I like the most is probably developing raw land to builders, is because I have zero involvement in it. My partner does all the work and I get a big check. From that perspective, that's my favorite because I don't have to do anything. But in terms of opportunity, it's certainly like Class CB value add in emerging markets. Specifically, our research follows manufacturing investments. That's why we're big in Greensboro. We're big in upstate South Carolina. We like to see large multi-billion dollar manufacturing investments. That is where we buy because we believe in those billion-dollar investments. They're usually multi-year investments. So we try to buy not really just when it gets announced, but when it's for certain, it's definitely happening. Shovels are in the ground, and there's still a lot of value upside to get once the factories are up and running. The thousands of jobs have been hired, and also thousands of supporting jobs will be hired. So that's our investment philosophy.
Very cool. Yeah, with the different asset classes that you have, in terms of raising capital for them, do you notice any difference in one asset class that's harder to raise money for than others?
Honestly, I've seen the smaller amount of money you need to raise, the harder it is. Once you get into big dollars, you can get in the door with institutions. We have a lot of institutional relationships that want to write only five, $10 million checks. So when I have to raise 2 million, it is way harder because I have to call the doctors and the mom and pops and the all the small investors to get 100 here or there. So honestly, it's more so size of the check makes a bigger impact from what I see than asset class.
I see. Okay. So when you're getting bigger check writers, institutional grades, what l- I heard that their terms is much more different than the retail investors. They demand more. Can you expand on that? Yeah. So it might be easier to raise from them, but are you able to have better control of the deal? Are you able to get the terms that you want?
Yeah, there's definitely a lot more reporting and auditing guidelines, and we have a full-time uh, team member. That's what they do. They provide all the financial reports, make sure all the auditing gets done. So there's definitely a cost to it, but it's well worth it because a lot of times what I've seen, the rates are lower. It's better than working with smaller pref equity investors who will charge 15, 16% on deals to be a bridge lender. Honestly, yeah, there's a cost to it, but if you have deals that meet their criteria, it's well worth it.
And are they on the senior debt level do they do the entire capital stack for you, or are they coming on as a
We
second lien
we've
holder?
Yeah, we've had both scenarios. There's plenty of them that like to be in that second lien holder position. So maybe if we're doing the last raise we did was $8 million, they came in with four, we brought in four ourselves. And there's been other scenarios. We have another deal where we have to bring six, they're giving five, and they want us personally to put in one. So we have skin in the game. There's all kinds of different scenarios.
I see. And do you source these? I assume these are like family offices, or do you go through a broker, an intermediary?
We've gone directly to family offices. Those are definitely a lot harder relationship to build. We've gone through brokers and paid the 2 or 3% fee. It's certainly worth it, especially if the brokers aren't gonna get you with the, hey, if you ever call them again for the next 10 years, you got to pay me 3% every time. A lot of times that's negotiable. And also, we've gone directly to just professional LPs, professional co-GP companies. Like you can look up, I'll throw a tip out here. Let's see, what is it? It's called Reseed Partners.
How
Have
do
you
you
guys
spell
heard?
that? No, I
R
haven't heard that.
E, yep, RESED Partners.com. So they're a professional co-GP.
I see. Okay. Very cool. Yeah. So I guess, so family offices, brokers, professional, GP, co-GP, type companies. What other type of money have you worked with?
We've certainly taken a lot of money that we've raised over the last decade on our fix and flips and that stuff, and just a lot of people want to move up with you. So those have been great investors. And we've been on several platforms. Honestly, it's nice to feature your deal on a platform such as CrowdStreet or Equity Multiple. Even if you don't end up doing the deal with them at the end, if they can't raise the money for you or whatever, the amount of people that will reach out to you is fantastic. We've had a lot
Ah,
of people reach out to us directly, be like, hey, we want to screen your company before we invest in their platform. And they're like, how does the LP side look? Maybe I don't want to be on the pref equity side. What are you offering on the LP side? And so we've met a lot of people that way too. It's been a great tool that we didn't expect.
that's a great idea. And what type of assets do they allow on there?
Yeah, I'm not 100% sure. We've only done our existing multifamily assets. But again, it's the value besides most of the time they'll raise the money for you. But I couldn't believe how many of their potential investors that are just doing their due diligence will look you up because they put your information on there. and then you can just have a conversation with them.
See, yeah, that's really good. That's a really good tip for sure. And how you and I came about, and you being on this call, it was from Tim Bratz making that post. And so, share with everyone a little bit about your strategy behind that and the result that you got out of that. That because I thought that was genius as well.
The secret sauce right now. We still have a lot of
Yeah,
time
let's.
left on this podcast.
No,
You want to save it to the end?
we can give it to them now. Yeah.
All right. So this is basically a strategy that just came out of needing to raise a lot of capital quickly and not waiting for some of these bigger groups to call, which is essentially what I'll do is I'll follow certain multifamily operators, influencers, and I'll go ahead and I'll look for their Facebook posts where they're posting about deals. And a lot of times, if they're well-known, successful like Tim, they'll get hundreds of comments, and then I'll have my team message every single person. We'll end up getting maybe 20% of them as a conversation, 20% of those, out of those 20%, maybe 50% will turn into a phone call, and then out of those, we'll raise money. So it's a very scalable, duplicatable process of scraping posts on multiple social media networks, messaging those people, and being able to convert the initial message to a phone call to a sending them kind of some information about your deals and then being able to close. Very scalable, duplicatable process of scraping social media posts from people that are already successful in multifamily because they're attracting other people that also want to be involved in their deals or their own deals.
Yep, exactly. And not only can you raise money for it, but you can also get yourself on podcast interviews
Mhm.
like what happened here. So I thought that was just a brilliant strategy. It sounds like you have a lot of different strategies, a lot of different sources of capital that you tap into depending on what your needs are. W- Has most of that just been through like trial and error that you discovered, what works and fine tune that, or did you hire any? Is there any agency that you hired to help you with the capital raising side? Like, what? Give us some insights into that.
Yeah, all of that was completely internally built, really out of necessity for capital. We love the philosophy of, hey, we're going to put a great deal under contract and then we're going to figure it out. We always have, we always will. We have that kind of nature. But now we're actually exploring every possible option, including hiring agencies because we're raising so much on so many deals. But really, a lot of these things that we're talking about, I feel like are the things you do when you're getting started. Once you get started and you have success, the word of mouth, friends of friends, that has been the biggest source of capital for sure when it comes to smaller investors. Once, especially if you have one family office, a lot of them know the other family offices. We'll have executives at big Fortune 500 companies. Once they see success, they're connecting us with the other executives there. So, a lot of what we're doing, what we're talking about here is really to get your foot in the door. But once you get your foot in the door with a lot of these people, you show them success, it should be a snowball effect of capital raising.
Very good. In terms of like your team, your investor relations team on the capital raising side, how many team members do you have?
For investor relations, it's really me, my partner, and our director of finance is doing the quarterly distributions, quarterly reporting, answers any questions about investments. Some of our investors like the institutional ones, will audit the financials. So he's in charge of that. But I enjoy and I pretty much send a monthly email to our investors, sometimes weekly if there's big things going on at certain assets with updates. And honestly, that's one of the things that I hear from our investors that they love, and how a lot of other GPs, hey, once the deal is closed, they won't hear from them again. So sending communication once a month, once a quarter is more than like what 90% of people are doing.
Hmm. And so do you handle like you within the business, how share with us like the structure between you and your partners, like who mainly plays what role in the business?
Yeah, and honestly, a lot of that was figured out in the last 6 months since we underwent through the EOS process. My partner had read Traction. I couldn't get through the book. It was way too dry for me. But we had a lot of people recommend going through EOS, so we just went ahead and hired an implementer. And so now we have quarterly meetings. and we figured out who we are in our companies. As of today, I'm the CEO and I run all the day-to-day operations of our companies with our other operators. And my partner's really the one bringing in the big stuff when he's getting properties entitled and approved. He's going out there meeting with local politicians to make sure we're getting those approvals that we need. He's doing big tax abatements stuff because, again, he's a lawyer. So he's doing that kind of stuff. He does our paperwork for our funds. He's out there cutting deals with our regional builders to build some of the bigger neighborhoods. We don't do those internally. It's just you can't compete with these regional and national builders on pricing and speed. So he's cutting deals there. So he's basically doing all the big ticket stuff in our investment company. And my job is the day-to-day operator of all of our companies. And I oversee all of our team members.
I see. So do you like based on EOS, do you sit in the visionary role? Do you sit more in the integrator role?
So when we started, I was definitely in the visionary role, at least in my head. And he was going to be the day-to-day operator. And then within about a year and a half, we realized we're sitting in the opposite seats. We switched, and things are going really smoothly now. So right now, I'm in the integrator role. I run the day-to-day, working with our team members, going through our dashboards for all the businesses. Yeah, and he's doing kind of the big ticket stuff, bringing in deals, big relationships. So I definitely would not be able to do a business like this by myself.
Very cool. Yeah. And share with us your mindset behind partnerships. Because obviously you're not shy from taking on partners. There are a lot of people that they have a hard time working with partners. Maybe they had other failed partnerships. Give us your mindset around partnership, how you view partnership, how you vet and find the right partners.
Yeah, a lot of my partners today I've known for a long time, and I've done business with them in a different capacity before we became partners. So that was really the vetting process is the guy who's our builder who runs our construction company. I spent 2 years building houses with him, learning how he works. Is he reliable? Do we mesh together? And a big part of that was establishing our core values in EOS, where I'm very direct. Our top core value is no bullshit. I want to be honest. I'm very direct, probably because I'm from New Jersey. A lot of our team members now know that. So establishing my core values and having a trial period of working with them in a different capacity before we ended up being partners. So I
Very
guess that would
cool.
be my natural process of how I vetted all my partners.
Yeah, just organically grew into it pretty much. Very
Yeah.
cool. Regard around EOS, Doug has a question here about did you use a service to find an implementer? Because he's looking to do the same.
We had a friend who was using an implementer, just recommended one in our area. And so I think if you call EOS, they'll assign you someone that's in your area. I think there's only one or two per market, depending on the size of the market, maybe more for large areas, but they'll introduce you to several people. You can see what their background is. A lot of these people are successful business owners, and you can just see who meshes with you on that first consult.
Yeah. And there's a couple people that specialize in EOS in our syndication space as well. I, yeah, Gary Sharper's one of them. He does a lot in the real estate space. And then there's another lady. Oh gosh, her name escaped me right now. The daughter of Russell Gray. Oh gosh, what's her name? Stacy Gray. You
Mhm.
want to Google her. She also does. Stacy actually specialized in doing the EOS specifically for the syndication business.
Excellent.
Yeah. All right. Um, yeah, guys, if you want to ask questions, go ahead and put it in the chat and I'll, ask your question along to Stan as well. In terms of this market, where it's going, stock market just crashed. What are you seeing in the horizon? You got started in 2009, so you got a taste a little bit of what that was like. What are you seeing and what's your strategy in navigating this market?
Yeah, we're certainly seeing a massive opportunity right now. We're going as fast and as big as I can. I think part of the reason we've been successful the last couple of years, and I've had calls with other people who have been in the market the last 2 years, and a lot of people just took on bridge loans and got smacked when the interest rates went up. And part of our philosophy is the numbers have to work today. So we're buying things that cash flow today, not 2 years after some value add. So that's a big part of it. We're only buying stabilized debt deals. So we're either assuming loans or we're buying deals with today's rates and they have to work today. But we're thinking there's going to be some nice interest rate drops here in the next couple of months. We're very gung ho and we're taking on as many projects as we can handle. We see rents going up in the markets that we operate in. I've heard the opposite in some markets. I'm not seeing that. Our occupancies are super high. We're not having any issues there. And so I'm thinking if the country does go into recession, there'll probably be some move down from Class A to Class B, maybe Class B to Class C, but I think rents will either be stable or continue to go up in C and B. So we're pretty gung ho on continuing to acquire those assets as much as we can. But we pretty much only do it with debt assumption deals or existing rates. And if you're doing big enough deal, agency rates are falling. You can get deals done at 5.25% on agency debt. So the rates are still very doable for today's deals.
I see. Now you focus primarily in the Carolina areas, correct? Like both North and South, is that correct?
Yeah, the plan was to get our foundation strong enough where we can operate assets in our core market, outside of our core market, and then just start buying in strategic markets that we see long-term growth in.
Very cool. And yeah, so for the foreseeable future, basically that's it. You don't like, do you have any plans going further down south into Florida or west or anything like that?
Yeah, we're going to be, I think, taking a big leap into Huntsville, Alabama. I absolutely love that
Okay.
market. Definitely want to be in the Research Triangle. Love that market up there. We're staying away from coastal just because of the uncertainty with insurance rates. They keep skyrocketing. It's too much uncertainty for us. So yeah, Southeast is going to be our playground for the next couple of years. We'll probably buy 50 million this year, 50 million first half of next year, and the goal is to do about 100 million in assets every year for the next 3 years.
Very cool. Yeah, guys, we're gonna open up for Q&A for you guys. So if you guys have questions, go ahead and raise your hand and we'll unmute you to ask Stan questions. Stan, for those that wants to reach out to you and connect with you, possibly partner with you, invest with you, where would you like to send them?
Yeah, they can email me directly, stan@vanrockre.com. That's we basically took companies that we aspire to, Vanguard and BlackRock, and combined the names into VanRock. So that's vanrockre.com. Yep, there you go. That's it. You can get me on Instagram at StanGen9. Really, those are my main ways to contact me.
Gotcha. All right, let's dig into the naming. What is it that you like about Vanguard? What is it that you like about BlackRock? Yeah, is your goal to be big like BlackRock? Share with us.
I think the dominance in their sector, obviously BlackRock went into single family big time at the most strategic time. Jonathan Gray ran that. And I think he's now the president over there. And I've always just really admired how he took the single family rental model, was just really at its infancy when he started with BlackRock right after the crash, and just bought 80, 90,000 houses and really made it a real business. So that's that, and just Vanguard in their dominance of the different markets they're in. Nothing too particular, but we're hoping by our 5th year of our company, we'll be hitting at about $1 billion in a variety of assets.
Wow, that's really great. Yeah. And Percy Nakora also does deals in Huntsville there. So you guys make sure you collaborate. Yeah. Because I'm sure Percy, you're striving for that $1 billion in assets as well, aren't you?
Yeah, actually, it is one of our goals, and we do use EOS as well, and we started investing in Huntsville about 5 years ago now. So we've done 7 projects there. We
Awesome.
currently have 3 of them that we operate. So
very cool. Yeah. All right. I'm scrolling up for questions here. Lance has a beginner question. Do we need a fund legally set before our first deal, 506B, C, or is it possible to raise funds to set this up while the deal is unfolding?
Yeah, I think I didn't create a 506C or B until a year or two ago, and we were just doing single investor deals. They were smaller deals. We'd raise 2-3 million bucks, but from a single investor. So really, unless you're going to be pooling money, you can easily raise money from one investor, two investors without having to do that.
Love that. Yeah. Yeah, and I think that the way that you're doing it, especially in today's market, because today's market, retail, and it's tough raising money from retail investors. So a lot of developers are choosing to go find bigger check writers and single investors for sure. I'm seeing that more and more.
Yeah, especially after the crash this week, there's going to be a little less dry powder sitting around.
Yeah. Yeah. Okay. All right. Matt, go ahead, unmute yourself.
Stan, how's it going? Matt Ramos. I'm from Connecticut. So my company, we went from 2 properties year 1 to 25 year 2. So we had good growth, and we're at the point where we're wearing multiple hats. We're trying to figure out the CRM system. We're trying to get organization with our investors, trying to keep all the properties without blowing up too fast. I guess my question to you would be, what's the biggest challenge that you had when you took that leap where you're really starting to scale, and how did you overcome those challenges?
Really, the biggest challenges were controlling our organization and growing our organization. And to correct that, we invested in EOS, and we invested in an awesome talent company that's been hiring all of our staff. They're not the cheapest, but they just bring us rock stars. And it's something we just said, my partner and I said, hey, hiring is not something we're good at. We don't have time for it. It's one of the most important duties. So we're just going to pay someone that's really good to do that. That's been a secret to growth too, is just paying an expert to hire our team for us instead of trying to figure it out ourselves. And I'll be more than happy to share that contact if you're interested.
Awesome, man. Appreciate it, Stan.
All right. Thanks, Matt. Fahad, go ahead.
Hello. I wanted to ask, I'm 15 years old and I'm looking to get into multifamily real estate. What advice do you have for me?
Yeah, my top advice would be go work for someone that is really successful in it. Go work for free, be an intern, learn as much as you can for a couple of years before you start your own company. The ability to work for someone successful in exchange for your time and help and get 20 years of experience given to you is so priceless. I would say find the most successful person in your area who could use an intern in exchange for learning the business. I wish I did that at your age. That would be definitely the number one thing I'd be doing if I was 15 years old.
Okay, thank you.
The fact that you're even thinking about doing that is awesome, dude. I was definitely not thinking about anything like that at 15 years old. So
yeah, and Matt Ramos also put a tip there for you in the chat. Become a real estate agent. It's a paid internship. That definitely could work as well. I actually know of a gentleman, because he's still very young. He's a commercial real estate broker in California. He's still very young, but that's how he started when he was younger. And now he takes on other younger agents and mentor them. Doing the same thing. So that's good. All right. Anyone else? All right. If there's no other questions, we're gonna put you guys into breakout sessions so you guys have an opportunity to network with each other. All right. We'll wrap up this part of it for now. Stan, thank you so much for being on this interview with me today. Thank you for sharing all of your secrets with us about how you raise money and how you strategically target the popular real estate influencers. Really appreciate you for jumping on the call with us today.
yeah, thanks for having me. This was awesome. Anytime you need me on any of your shows, Tim, I'm always here for you, buddy.
All right. Thank you.
Thanks.
Okay. All right.